Sage here for Kalkai Media. Please subscribe to the channel and press the bell icon to be notified of the latest videos. In today's topic, we're covering, is it good to invest in ASX travel stocks now? The economic recovery is yet to cast its spell on the travel sector, and the past year and a half have been difficult for the hospitality and tourism industries. International restrictions meant that air travel giants such as Flight Centre and Webjet had to completely close their operations, and the devastating bushfires in early 2020 were also a major cause of disruption in the travel industry. Now, within the travel industry, the damage across professions has been uneven. For instance, the aviation sector has seen the largest proportion of the losses since borders have closed. Other sectors have been able to channel out to different paths and have stayed afloat when the pandemic hit. As the economic recovery takes shape, various sectors are looking at a hike in consumer demand. Improved employment statistics mean that the Australian population is up and running, working longer hours and ready to spend the earned income. Relaxation of lockdowns and vaccine rollouts have been other harbingers of a sense of normalcy that is much awaited by all. The extent of the damage. Earlier last year, the UN had laid out an expected loss of $1 trillion to the global economy due to the pandemic. It was expected that 100 million jobs across the world would be lost. The actual figure might have been higher than these expectations. However, most economies have now entered a recovery phase, including Australia. The stock market performance of some of the biggest companies have resonated with the economy's slowdown and the gradual recovery. March 2020 was a month of continued losses for some of the prominent travel sector players. What followed was months-long hiatus for airplanes, hotels and the respective staff members, and consequently the share prices of travel sector players plummeted to levels not seen in about half a decade. The major setback to the tourism industry came from the restrictions on international travel. And while domestic travel has eased the total losses faced by the tourism industry, it has not been able to stand at par with revenues received from immigrant inflow and international tourists. Aviation sector players. Aviation companies were finally able to find some consolation when domestic travel picked up. And after almost a year of dismal stock market performance, March 2021 paved the way for substantial stock market gains for these companies. Flight Centre Travel Group, one of the biggest travel agencies in Australia, recorded a substantial stock market hike in the month of November 2020, and these gains were overtaken by the company's March 2021 share price performance, leading up to its one-year peak in the month. FCT is trading lower, making it positioned for gains in the coming months. Another travel giant in the Australian market, Webjet, recorded its one-year high in the month of March this year. The company's stock market performance has much been like Flight Centre Travel's, which picked up in November 2020 and locked in highs in March 2021. Some of the best performing travel shares during the pandemic included Alliance Aviation Services Limited and Sealink Travel Group Limited. For the first half of financial year 2021, the company recorded a revenue hike of 176.4%. Following the substantial revenue hike, Alliance received a wet lease agreement from Qantas for 14 of its aircrafts. Additionally, Santos Limited and BHP Group have also signed charter services agreements with Alliance, providing a stimulus for its future growth. And similarly, Sealink has benefited from its partnerships. The company acquired Transit Systems Group in January 2020, leading to its above-average performance even in early 2020. And the company's share prices saw a steady increase of 118% over the course of the pandemic. And this continued share price rise has made Sealink an investor favourite, with many investors flocking to the market to buy the company's shares. Normalcy, a slow and gradual process, and evidently the economy is in a transient phase, which serves as the perfect ground to record higher growth, and much help came from the government's $1.2 billion Australian dollar tourism industry stimulus package that was announced in March of 2021. And this included 80,000 discounted air tickets and loans for tourism operators supplied by the government. The current momentum building up in the industry is bound to benefit large players, including Webjet and Flight Centre Travel. The current drop in the stock prices could soon be followed by meteoric rises because international traffic could be a major stimulant this time, unlike earlier this year. Many traders believe that the current stock price drops have made these otherwise growing stocks cheaper. Thus, they consider them to be presently discounted and are actively buying shares of these travel players. The pent-up demand would surely boost the financial and stock market performance of these companies. The bottom line, it may be a good indication for the travel industry that most Australians have been frustrated sitting at home in the pandemic and with nowhere to go, even for an outing. Domestic leisure travel has certainly picked up thanks to the long-term break in excursions experienced by individuals. And this is likely to be a great stimulant in the coming months as well. Thanks for joining us on The Report. If you like this information, please like, share and comment on the video below and subscribe to the YouTube channel. Press the bell icon to be notified of the latest videos, and for more information, regular updates, please head to the website kalkinemedia.com and stay here for Kalkine Media.